but I think we can head to 50 trillion. That means Bitcoin, in my view, can go up to $1 million. It'll be $20 trillion of value. So I think that's where Bitcoin's heading. And then you have 10 trillion for the altcoins and everything else. And then you have, I think 20 trillion will be all the rest of the businesses, the projects, everything that is involved in this move of value on chain. And that's how I get 50 trillion. Some people would say, oh no, Bitcoin's going to be 50 trillion, but that would put it at a $2.5 million price tag. That's 25 times today's price. I mean, maybe it could. I think a 10x in 10 years is a lot more reasonable.
The numbers sound unbelievable until you run the math. What began as an obscure digital experiment could grow into the largest wealth creation engine in history, with the entire crypto ecosystem potentially reaching a $50 trillion valuation. This isn't wild speculation. It's the logical endpoint of blockchain's inevitable collision with traditional finance. Dan Tapiero, the renowned investor and market strategist, speaks with unmistakable conviction. We're heading for a $50 trillion market, with Bitcoin alone reaching $1 million as it drives a $20 trillion valuation. Toss in $10 trillion for altcoins and another $20 trillion for on-chain infrastructure, and suddenly those pie-in-the-sky numbers start making sense. While he acknowledges a 10x gain in 10 years might be more realistic, the underlying premise remains unshakable. We're early in the greatest value transfer since the invention of stock markets. At these valuations, Bitcoin would eclipse gold's entire market cap before breakfast. Ethereum and major altcoins would become financial superpowers. And every decentralized application, NFT project, and blockchain protocol would collectively form an economy larger than today's global tech sector. This isn't just investing, it's front-row seats to the reinvention of money itself. Let's watch more clips from Dan Tapiero's explosive interview to gain more insight. Don't forget to like, subscribe, and enable notifications for additional in-depth content. Thanks for joining us again. Enjoy the video.
The summer of 23, when Larry Fink changed his mind about Bitcoin and said BlackRock was going to come with an ETF, that was essentially the end of the bear phase. I mean, it really bottomed after FTX in Q4. And then, the release of all those ETFs in January of 24 and the Trump administration change, I keep saying that the Trump change of view and approach to our space is the second most important event in the 15, 16-year life of Bitcoin, cryptocurrency, blockchain, Web3, digital assets, whatever you want to call it. And that's because we've never had a government be supportive in the way the U.S. is. And not only that, it's that the U.S. is the most important, wealthiest country in the world. And, they have a mission now, as stated, to become the world's leading cryptocurrency blockchain hub. I mean, this is mind-boggling. This is part of their platform. 9 months ago, companies in the space, all sorts of projects were beleaguered, literally beleaguered, being attacked by the SEC, being sued for this thing or that thing. And then all of a sudden, new administration, and those suits have been dropped. I mean, it's pretty incredible. It's the most, dramatic 180-degree change in a view that I can think of, certainly in my lifetime, but I mean, in the financial markets. And what's happened is that the credibility, the trust that sometimes is lacking in our space, you have characters like FTX, doing damage, but the trust that, that we still need to regain in the space, I think that the Trump's move and their platform has brought a lot of that trust, back. I would say. I mean, I'm not in love with the whole meme coin thing that he did. I understand it, and I think it makes some sense. Maybe to discuss at a different time, but the reality is that Bitcoin at 100,000 with these positive developments. If the short interest rate, which is 4%, were at 2%, for instance, I think Bitcoin would probably be at 200,000. the economy is slowing. You asked me about like the US economy is slowing. Inflation is not a concern. I'm not sure what Jay Powell is doing. I think Trump's view and Bessent's view is right. Bessent said, hey, the 2-year is at 3.79, the fund rate's at 4.25. He said the 2-year is telling the Fed what to do. And that's exactly right. I think that the data is slowing down enough that we're going to have an interest rate drop down, hopefully below 3 on the Fed funds. The 2-year will lead it there. But look, we've also just had a 10% drop in the dollar against the euro, and that's helpful. I think the dollar is probably entering a bear phase. I was wrong on the dollar earlier in the year, and last year I thought it was going to be very strong. But the reason I've changed my view is because the fiscal policy that they're taking on, okay, the Doge, not just eliminating whole government offices, but reducing the spending in those government offices, plus, the tariff situation, which acts as a fiscal tightening, that needs to be offset by some sort of monetary offset to keep things in balance so the economy doesn't have too aggressive a pullback in liquidity, in demand side drivers, right? So it's like fiscal policy has been contributing to demand and now it's not. And I think monetary policy needs to offset that. And the dollar is already sensing that. And that's why it's weakened. I think last thing we say, ideally, in a perfect world, Bessent and Trump or whoever should have gone down to Jay Powell and said, hey guys, we're going to be undertaking the greatest fiscal tightening of the last 50 years. Give us some slack on the monetary side. Like, hey, let's work together on this. That would have been, and maybe they did do that. I don't know. But Powell, for whatever reason, is really holding back here. And I think he's, the next few months, the data will just, confirm that he needs to move. And that'll help Bitcoin and the whole digital asset ecosystem, ETH, Solana, the whole world sort of take off again. Because there is a part of our world that is driven by this liquidity from the old world, right? Regardless of the good fundamentals that are relating to Bitcoin, regardless of the good fundamentals relating to some of the other projects and, the activity in the space, the growth of DeFi, stable coins, even NFTs might be coming back a little bit here. So I think you just have a little bit of liquidity from the old world come in. You have Bitcoin head up to, my target has been 180 for a long time, like the last, since the bottom, really, that was sort of my target. But most guys on X are telling me that I'm way too conservative. So, what can I tell you? When the VIX was at, what did it get to? 50, 60.
Yeah.
That priced an extreme moment of fear. And I would say, acted as the sign, the signal to the authorities that, okay, things are too tight. What happened? 2-year goes to 3.79. The dollar drops 10%. The markets themselves act as self-regulating mechanisms. They're self-correcting. So I think that action, that the market action started to ameliorate the fiscal tightening. And that's why Bitcoin also started to improve, because that was the sign, as you remember, Powell kind of softened a little bit. Trump softened a little bit on the tariffs in China. The markets told them, okay, guys, you went a little too far too quick. Now, I know Paul Tudor Jones came out yesterday and said, oh, the markets are going to go back down because fiscal policy is too tight and monetary policy, he's sure Powell's not going to ease. Well, Paul is one of the 2 or 3 greatest macro traders of all time. So it's hard to take a view against him, but I don't see that happening. I think that was it. And maybe we have a retest, maybe something happens, but I think pretty much that was the extreme. The markets priced it in. I think the unemployment rate going from 4 to 5 is good. And the unemployment rate going from 4 to 7 is probably not good. Right. So it's about degree and extent and speed.
Gotcha.
But I think we're on plan for like a slow slowdown, right? I don't see, China's been slowing. And then don't forget the rest of the world, which many Americans do. China has been slowing much more severely. They just cut interest rates 2 days ago. I put a tweet out there on that. Now their short rate is 1.3%. So 1.3, imagine if the US were 1.3. Bitcoin, could be 200, 300. I don't even know. But they're really concerned, of course, that the tariffs impact them more. Remember, trade is a sort of smaller percent of what we do. So they're concerned. The ECB has already cut interest rates, right? Was that a month ago or 2 months ago, whenever they did it? So that's the rest of the world economy. They've cut. And also that's supportive of liquidity, global liquidity. And that's also supportive of Bitcoin. So some part of this recent rally is also that other central banks have acted.
The crypto winter thawed when BlackRock's Bitcoin ETF flipped the script in 2023. Then came Trump's policy shift, dropping SEC lawsuits and pledging to make America the crypto capital. With inflation cooling, rate cuts looming, and the dollar weakening, macro winds now fuel the fire. Bitcoin at $180,000 is too conservative. As global central banks ease, institutional cash floods in. The message is clear. Crypto's political and financial battles are over. The race to front-run the boom is now underway. Beyond borders, beyond politics, Bitcoin operates on its own rules. As AI supercharges blockchain adoption, the US emerges as crypto's capital, while Europe stumbles with overregulation. The numbers tell the story. $800 trillion in traditional assets versus crypto's $4 trillion market cap. The coming decade will see real-world assets flood on-chain, with AI as the accelerant. This convergence could catapult digital assets to $50 trillion. The revolution isn't coming, it's here. Let's watch more clips from the interview.
Look, obviously, Bitcoin doesn't have a geography attached to it, doesn't have a fiscal policy. There is no government. It's independent of all governmental, tips. So if one government is unhappy with another one, maybe it impacts the currency, maybe it impacts the underlying economy, but Bitcoin is outside of that. So yes, it's helpful in that sense. But in the other sense, to me, I just see it as I said, fiscal, not austerity, but fiscal tightening. It's a damper on growth. If there's going to be more of a tax on a certain consumer product, maybe that reduces the demand. Also, importantly, it creates uncertainty. So people just don't know what to do. Mm-hmm. And uncertainty slows growth. So that's another thing, right? Uncertainty in and of itself slows growth. And slowing growth is what we want, right? So that Powell doesn't have to worry about non-existent inflation. There are a lot of companies that aren't really tech savvy, so they're probably going to have a problem. Mm-hmm. I think people that think the U.S. stock market is going to start to underperform other stock markets, there's no chance of that, in my view. Most of the places around the world are not as tech advanced or as sensitive to introducing new tech into processes. So, I think China can do quite a lot, in the robotics area, but they don't really have a stock market. I mean, they, in the sense that people don't really trust their assets. When you make an investment there, investors don't know that your money is your money, right? If people can disappear in the middle of the night for 2 weeks, who run large companies there, foreign investors don't want any part of that. So, China can probably, in a massive way, adapt, this robotic AI agentic future. Europe, I think, is way behind. I mean, just in our space, look what happened. Tether decided yesterday they're exiting Europe completely because of these micro regulations. I mean, think about how phenomenal that is. They're exiting a whole economy that's the same size or maybe a little even bigger than the US because they don't want to be subject to those rules. That doesn't seem like a tech forward kind of place to be. And so the people who are getting left behind, it's massively deflationary for them too, because they get crushed. And then the people implementing AI, their margins explode. Mm. And so Look, I think it's exciting and it interacts with blockchain as well. I think AI and blockchain, all these agents out there, the move to, the move for the analog world to the $800 trillion in assets that is out there in real estate, in bonds, stocks, all of those things is all eventually going to be put on chain. And I think eventually all of it will be fungible with each other, be tremendous opening up of liquidity, many assets that are illiquid, the whole movement into, RWAs. I think it's happening. It's still early. And then that will be integrated with the whole new world of cryptocurrency and decentralized networks. And I think they merge. And I think AI is going to, help make that happen. Also, I think AI is very obvious and speeds up the development of the blockchain world, because just think about like how difficult it is to move, I don't know, coins around in DeFi and all the different things you can do in DeFi. I mean, if you're a civilian, just a guy out there who doesn't even own Bitcoin, DeFi would like blow his mind. But the people who are active in DeFi are super tech and AI focused. So I think you get lots of applications of AI in the blockchain Bitcoin world, because frankly, in my experience, I mean, those are the smartest people I've ever come across. Not the 23-year-old pump and dumpers of new coins, but I'm talking about, the guys out there building new chains, the guys running these major companies, Brian Armstrong, Arjun, at Kraken with David. You have, some of the larger companies, Mike Cagney at Figure, Pascal at Ledger. You've got guys who are running really big businesses. And I think, by the way, many of those businesses are going to become public in the next, 12 to 24 months. I think the US, as I said before, becomes the blockchain crypto capital of the world by encouraging all these companies to list on the NYSE or on NASDAQ. And I would hope within 2 to 3 years, we've got 30, 40 companies. Maybe they're not as large as Coinbase, but today Coinbase is the only public crypto blockchain company, of any significance and size. And so I see a migration of those companies, foreign and domestic, to get listings. I think it gives them huge credibility. And it also allows the traditional world access. It gives them comfort to buy, right? Because they can buy equity. Americans love owning cash flowing, successful businesses. They're not going to, harder for them to jump into a Punk or a Bored Ape and all of that kind of thing. That's just, it's a little too degen for them. And I focus on there's 800 trillion in assets, and the digital asset ecosystem is worth like 4 trillion, just like 5%. It's very small, very small. And that's why my new fund's called 50T, because I think the value of the digital asset ecosystem generally can get to 50 trillion in the next 10 years.
The crypto markets are roaring back to life, with Bitcoin flirting with $104,000 and Ethereum exploding 32% this week alone. But this isn't just another bull run, it's the beginning of the massive financial transformation that macro investor Dan Tapiero has long predicted. His vision of a $50 trillion crypto ecosystem is materializing before our eyes, fueled by 3 unstoppable forces: institutional adoption, technological convergence, and a historic regulatory pivot. While traditional markets remain shackled by geopolitical tensions and fiscal policies, Bitcoin continues proving its value as the world's first borderless asset class. Tapiero's insights ring especially true today as we witness the fallout from Europe's regulatory overreach, exemplified by Tether's recent exit, contrasted with America's emergence as the clear leader in crypto innovation. The Trump administration's pro-crypto stance has unleashed a wave of institutional capital, with Coinbase's 24/7 futures trading signaling Wall Street's growing appetite. The numbers tell the story: $800 trillion in traditional assets versus crypto's $4 trillion market cap represents the greatest wealth transfer opportunity in history. As AI supercharges blockchain development and real-world assets begin migrating on-chain, Tapiero's $50 trillion projection appears increasingly reasonable. Ethereum's flawless Pectra upgrade and Dogecoin's 27% weekly surge are just early indicators of what's coming. This is crypto's breakout moment, the point where speculation becomes systemic transformation. The markets are voting with their dollars, and the message is clear. The future of finance will be decentralized, borderless, and measured in the tens of trillions. The only question that remains is whether traditional investors will adapt quickly enough to ride this wave. One thing's certain, the crypto revolution won't wait for anyone. As we wrap up, do you think $50 trillion for crypto is realistic, or is Dan Tapiero being too optimistic? Let us know your thoughts in the comments below. Share this video and hit the like button. Thanks for watching, and don't forget to subscribe.